Hello there. You are watching the FinTech Magazine Show, brought to you by FinTech Magazine, InsurTech Magazine, and BizClik. My name is Scott Birch, and we bring you all the latest news, analysis, and opinions from the world of FinTech and a little bit of InsurTech every 2 weeks, right here on LinkedIn, YouTube, and across our digital platforms. Joining me today, as ever, is FinTech and InsurTech editor Joanna England. Hello, Joanna. How are you today?
Hi, I'm good, thank you. How are you?
Do you know what, Joanna? I'm all right. I'm full of the joys of autumn, I suppose, because it's looking a little bit dark and gloomy over in the UK, but I am basking in the sunshine of Dubai at the moment. So I'm sorry about that. It sounds like I'm gloating, but I'm really not. And wherever you are joining us from today, just a reminder to come and say hello by posting in the comments section, which you should be able to see just underneath the show or just to the side. And you've also still got time to go and vote in our LinkedIn poll as well. So, Joe, what question have we been asking our readers and viewers this week?
Right, so this week we asked our LinkedIn followers, what form of B2B fraud has you most concerned? Is it 1, business identity theft, 2, misrepresentation, 3, bust out, or 4, payments fraud?
Indeed. And we were discussing this backstage before the show. We've been discussing payments fraud from a personal consumer level. But we'll be sharing the results of that poll after the break. And I'm delighted to say we're also going to be joined by experts from Dun & Bradstreet who are going to be discussing B2B fraud. But there's a lot to talk about before then. So let's start by taking a look at the latest FinTech and InsurTech news. Okay, Joe, so why don't you kick things off? What's happening in the wide world of FinTech?
Well, Scott, the story I wanted to focus on for FinTech has the headline, Bank North announces its insolvency. Now, this is a very sad story because Bank North launched in 2018 amid so much optimism, and it had a great strategy in terms of its plans to serve SMEs in the UK, and it also had a really strong leadership team. So the CEO is Ron Emerson, a veteran of the banking industry, the founding chairman of the British Business Bank. His extensive career has included a period as a senior banking advisor at the Bank of England. So there's been no shortage of experience or knowledge at all. But sadly, the current financial climate has meant that Bank North experienced a shortfall in funding. They needed $33 million to fund a banking license from the Bank of England. They couldn't raise the capital, and neither could they continue to run at a deficit. So it's really an example of a fintech that was doing everything right, everything should have been fine, but this time the challenging climate won. And I think something like this is a real wake-up call to the industry, because focusing on resilience rather than growth right now needs to be paramount for fintech companies. Otherwise, I think we will see more stories like this on the news pages.
Well, yeah, I completely agree, Joe, and I think that's what we're seeing across the tech sector as well. You know, the wider tech sector, not just fintech, as companies are focusing more on that resilience rather than that incredible growth that we've come to expect. Let's be honest here. How often do we talk about unicorns that only started 2 weeks ago? Or so it seems. But yeah, I think it's interesting. Like I say, in tough financial times, and let's face it, that's where we are right now. I think some different strategies need to be playing out here, and I think resilience and mitigating that risk is a huge factor. Well, talking about risk, I know your second story is about something obviously you can't necessarily plan for. It's one of those sort of grey rhino events, I suppose, rather than the black swan, and that's the weather. And obviously the impact it's had, it's having across the world right now. But I think you're focusing on Florida and Hurricane Ian.
Correct. I really wanted to flag this up. The headline for this story is why Hurricane Ian is blowing a storm across Florida's home insurance market. Now, this is an interesting one because as the insurance industry gets bigger and bigger and generally uses technology to address new challenges, Florida has pretty much been abandoned insurance-wise. So the protection gap there is getting bigger and bigger. And this means that when a large event happens, as with Hurricane Ian, thousands of people lose their homes and very few of them have adequate insurance to rebuild. And the results are just absolutely devastating. So more erratic weather patterns are being blamed for this. But I have to say that I'm not sure I really buy that as an excuse, because Florida, after all, is the US storm and flood capital. So if you look at the numbers, it gets an annual 60 inches of rain a year. It also has very flat terrain, thousands of miles of coastline and streams and of course the Everglades. And it also has a well-documented hurricane season. So a big storm happening and massive floods shouldn't really be a massive shocker. And you would have thought at this point that there would be more provisions in place. But the biggest problem really just comes down to risk. And that's been exacerbated by the fact that the infrastructure against storms and floods are really not as they should be. Poor building regulations haven't helped. The predictability and management of storm evacuations and measures have also been criticised, especially with this most recent event. And because of these factors, Florida is really just not a good business prospect for insurers. It's too risky. Now, to put that into perspective, currently the insurance loss bill as a result of Hurricane Ian stands at $57 billion. Now, that event only happened last week. So you can only just imagine. I mean, we don't even have the full figures in yet. It could be more than that. Obviously, there are going to be margins of error. It certainly won't be less than that. So really, the situation on the ground is that less insurance providers equal less competition and equal higher premiums. And so Floridians, which is people from Florida, they're already paying 3 times the national average for their flood insurance. And that's really just for people who can actually afford it, because lots of people just can't afford the cover. An example for this would be in the recent storm, in the areas that were most seriously affected, only between 18% and 1.3% of residents in the worst affected areas had flood cover. So right now the situation is pretty dire. And it seems to me that what Florida really needs is sort of like some sort of insurance superhero to sort of sweep in and just usher in tons of changes, sort out the infrastructure, bring in loads of new technology and basically save the day.
Well, Joe, you make it sound so simple. So if there are any insurance superheroes tuning in today, I'd be delighted to hear your views on this. And just to say some quick some hellos. Actually, people are joining us from New York to Nigeria. We've got people from the Philippines, got people from Mexico. So truly global audience as ever. So thank you so much for tuning in. Why don't you come and tell us where you are? And if you're based in Florida, actually, why don't you share your views on the insurance situation there? But look, we'll be back right after the break, where we're going to be talking to Dun & Bradstreet, as I said. But before then, we're going to watch a little video which might explain one of the reasons why we're speaking to those guys. So don't go away. We'll be right back.
B2B fraud is a growing concern for many organizations. Fraud perpetrators are using increasingly sophisticated tactics, and protecting your company requires an adaptive approach to better understand B2B fraud risk and help mitigate it. It's important to stay one step ahead. Using predictive data and analytical insights can help safeguard your business from both financial and reputational loss. Dun & Bradstreet is a leading global provider of business decisioning data and analytics. Our B2B fraud risk solutions can help finance and compliance teams enhance their due diligence processes and protect their bottom line. Visit dnb.com/B2B fraud to learn more about understanding B2B fraud risk.
Welcome back. And still to come, we're going to have some more information on the upcoming FinTech and InsurTech live event, which is happening. Ooh, Joanna, do you know the dates? It's the 1st and 2nd of November, isn't it? That's our 2-day hybrid event taking place in London. So if you're in London 1st and 2nd of November, please do come and join us. If you're not, wherever you are in the world, you can still join us online as well. We'll give you more details about that later. But first, and I've got a rather squeaky chair, I do apologise for that, we have the results of our poll, I think, Joe. So to start with, why don't you remind our viewers what the question was, and then let's see what the results are.
Sure. So our question was, what form of B2B fraud has you most concerned? And the results are, number one, business identity fraud scored 24%. Number two, misrepresentation scored 9%. Number three, bust out scored 2%. But the biggest concern for our LinkedIn audience was payment frauds. 64% of people are most concerned about that.
Well, very interesting results in some ways, and then in another way, maybe not too surprising that payments fraud was so prevalent. As I was saying, Joe, we were talking about this earlier because I spent a significant amount of time on the phone to my bank earlier. Which is a good thing because obviously they're helping to prevent fraud, but it can be a bit of a pain point for consumers, as it can be, of course, for businesses, which brings us nicely onto our two special guests for this afternoon or this evening, depending on where you are. So to talk about this very subject, which is B2B fraud, delighted to welcome Vincent Smith. He's the Senior Principal Product Manager Fraud at Dun & Bradstreet. And Andrew Lamarca, he's Senior Director, Fraud, Compliance, ESG, and Public Records Ops. I hope I got those titles right there. So welcome to you both, Andrew and Vincent. Welcome to the show.
Thank you, Scott.
Thank you. Thank you, Scott. Thank you, Joanna. Nice to be here.
Now,
thanks for having us.
So, delighted to have you here. Now, for anyone who doesn't realise this is it's more than an intercontinental broadcast today. We're actually sitting in 3 different continents. So the wonders of technology that's bringing us all together for this chat. So obviously the poll results there. I mean, payments fraud was a runaway leader ahead of was it business identity theft? Was the second one? Joanna, yeah, it was, wasn't it? But what do you guys make of that? I mean, Vincent and Andrew, is this something that you would expect from a poll like this?
Yeah, I'm not surprised. I think even when you look at B2B or B2C payments, people want to get their money, right? And they want to make sure it's coming from legitimate sources. So I'm not surprised at all. What I am happy to see is that business identity theft was second.
Mm-hmm. I'd agree with that, Scott. I would say non-payment for goods received or whatnot is a huge issue. Whether it is the individual himself not making the payment or someone stealing his identity, posing as him, obtaining the goods and not making the payments. But payment fraud is huge in the industry right now.
Absolutely. And well, look, we're going to be talking specifically about B2B fraud. And just to give you a bit more insight into Vincent and Andrew, Vincent's got more than 17 years of experience developing and managing identity verification, fraud detection, and watch list solutions. And he works with companies across the globe to identify and build solutions to help reduce the effects of business fraud. And Andrew has worked as an anti-fraud professional for the past 13 years. He's a certified fraud examiner and certified anti-money laundering specialist. And his current role at Dun & Bradstreet sees him lead the fraud, compliance, ESG, and public records operations teams, as I said. So, gentlemen, great to have you here today. And we're going to be talking a lot more about the B2B fraud space. But first, I suppose we should say, what is B2B fraud? Andrew?
Yeah. So when you think about fraud, right, every organization views fraud differently. It could be various forms, right? And when you're looking at B2B fraud, it's really no different than business to consumer fraud, right? In the business to consumer space, you have a business that's supplying goods or services or even credit, and it's giving it to an individual. In the business space, it's the same thing, but it's behind a business identity, right? And how Dun & Bradstreet sees B2B fraud is the exaggeration, fabrication, omission, basically the puffery behind a business or its identity data for illicit gains.
I'll add on to that, Andrew, that when a lot of people think about fraud, they don't take into account things like the loss of all business resources, whether it's time investigating, researching, mitigating fraud attempts, or the actual effects of the revenue loss itself. And then there's the reputational aspect of fraud that, you know, once your business is associated with fraud, there's sometimes a reputational factor that comes into play that you'll have to overcome as well. So I would lump it into a wider category and say any type of loss from a business resource that can be attributed to dishonest activity for personal or financial gain.
Yeah, absolutely. And so now we've established, you know, what B2B fraud is, and obviously we mentioned that it can take many different forms. What's the current landscape like? And I realise this is probably, you know, changing on a daily basis. So what's it currently like? What are some of the trends that you're seeing at the moment?
You want to take that one?
Oh yeah, I would say the biggest trend that I've been seeing still stems from COVID. And during the COVID era, a lot of businesses were forced to have their employees work from home and conduct business in a digital marketplace. That digital marketplace is a perfect environment for fraudsters to conduct business. It's a faceless environment. And with a faceless environment, fraudsters can easily follow the money, take over accounts, steal identities. The business identities and principals are publicly available information. And with this, they're able to assume the business identity, either a defunct business that they will resurrect, or take over a business, assume the principal's identity, and increase their credit lines, take products and services, and cash out, and leave the business holding the buck. It is a trend that continues because the digital marketplace isn't going away. It's a great way to do business. It's got some profit stems in it that we could take advantage of. And more companies are moving to the digital landscape. Those who don't move to the digital landscape can't compete as well as other companies who are moving. And the companies that have moved to the digital landscape lack the necessary tools to face the digital digital fraudsters in this environment. What they're tending to do is use their same consumer fraud mitigation tools that leave gaps. Now, when they first implement these tools, fraudsters aren't as adept at mitigating through them. But as fraudsters adapt, companies aren't adapting, and they're opening gaps where fraudsters can take better advantage of the loopholes in their mitigation systems. That's the trend that I'm seeing that's big, and it's not only moving across a particular company, but they move from company to company, industry to industry and making a widespread impact on fraud in the business community. Businesses just aren't prepared for the digital landscape of fraudsters.
Vince, I just want to pick you up there as well, because like you're saying about fraudsters, like, taking over a company identity. How easy is it for them to do that?
Very easy. Most of the information, or the general information, is publicly available. The name of the business, where they're located, their principals, and most businesses only verify those elements, as opposed to a widespread of elements that a business, their business status and business events, and verifying more deep, rich information that's not openly available. So if a fraudster can get a hold of the basic information, and that's all that a company is verifying against, you can see how easy it is to take over that account and build up credit or take products in the name of the company by assuming either the business identity and or the principal's identity. Andrew, can you add to that?
Yeah, if I could just jump in there, because, as you alluded to, Scott, right? I lead a team of certified fraud examiners at Dun & Bradstreet, and we have the privilege and honor of working with our clients as well as protecting our data cloud from any misrepresentation or business identity theft. And on that matter about business identity theft and how easy it is, as Vince alluded to, it's extremely easy. And there's several reasons why, right? Open data, right? A lot of data is out there. A lot of data on businesses is out there. There are certain registries or even states that have more open data and more transparency than others. And that's usually where we tend to see the most business identity theft occur, right? And as also Vince pointed out, businesses aren't adapting enough at the speed at which fraud is committed to identify business identity theft. And when Joanna had pointed out that business identity theft was second, and I said, I'm happy to see that. That's good, because that means the awareness is increasing. People are becoming more and more aware about business identity theft. In 2020, Dun & Bradstreet saw over a 250% increase in business identity theft.
Wow.
Now, to stop right there and think about that. From 1 year to the next year, a 250% increase. That's alarming in a fraud trend, right? And that's basically in 4 markets: US, UK, Canada, and Ireland. Imagine what's transpiring on the global landscape, right? As technology advances, fraudsters advance. As Vince pointed out, fraud teams and organizations have to adapt at the speed at which fraudsters are advancing, right? You think of AI, machine learning, web scraping. That's what fraudsters are doing. We're seeing troves and troves of applications being taken from business registry information and impersonating businesses, right? Mm-hmm. Doubling down on what we're also seeing with business identity theft, a bad actor might compromise a business registration at a particular state in the United States, but to layer and make it more complicated for the organization to which they're going to commit their scheme against, they're going to move that organization to a different state. Now they're creating more paper trail, right? And now they're putting more time and pressure on that organization to do their due diligence. So they're obfuscating to where their actual true location was, and they're still recognizing a aged corporation, whether it was defunct or even if it's still active. Another trend that we're seeing is business misrepresentation, right? Businesses fabricating, exaggerating their actual business identity and what their business actually does, right? If you look back, I had pointed out 250% increase in business identity theft. In 2022, just in Q3 alone, comparing to Q3 2021, Dun & Bradstreet is seeing a 13% increase in businesses misrepresenting themselves compared to the previous Q3 of 2021. Right. So as you saw, the COVID-19 and the availability of funds that was being released by governments all across the world, business identity theft was the hot topic. But then you look at 2022, right, as now that the availability of funds is no longer there or it's diminished, you're seeing businesses misrepresent themselves to be able to get credit, goods, and services. And that is leading to what my team is seeing, these certified fraud examiners, as that new B2B fraud, I guess you could say the next rising trend.
Could you give us some examples of that, Andrew? I mean, obviously, I don't want you to mention, specific, companies or businesses, but give us some examples maybe that you've seen in the real world, and maybe just allude to, what industry they're in or the kind of organization they are. As
the organizations that are being victimized or that are being, being used as the fraudulent organization.
Victimized, I suppose. Victimized.
Yeah, I mean, you tend to see it from all sizes, right? Large, small, medium, enterprise businesses. But what we tend to see the most is small to medium-sized businesses, right? And as I pointed out to you before, the greater concentration of people, we see the greater concentration of fraud, and usually around the perimeter of the United States. And Joanna, you mentioned Florida, right? We tend to see the most business identity theft coming from Florida. There's a lot of businesses that were formed and operating in the state of Florida, and that's where we tend to see it a lot, right? There's more availability of businesses and data to be leveraged by bad actors, and we're seeing it, right? All forms and shapes and sizes. One thing to note: anytime you go through a new school year, right, or a new semester, schools, universities, they're victims of identity theft, right? They need to buy goods. They need to buy supplies. Our companies that we work with, our clients see it every single year, and it's almost the same type of cadence. Beginning of the school year, middle of the year, right around the holidays, right when everybody's doing online shopping, because now everything's digital, and then also right again as the school ramps up.
Mm-hmm. One example, Scott, that comes to mind. There was a organization, a business that misrepresented their financials to obtain a huge loan, millions of dollars, and actually had already filed for bankruptcy. So they obtained the loan by misrepresenting themselves and disappeared. Now, they were caught. That particular instance was caught, but think about all the opportunities or the fraudsters, first party at that don't get caught. And it cost us taxpayers millions across the globe.
Absolutely. Look, obviously we've got our audience joining us live, and I know we've had a few comments come in. Joanna, have you had a chance to select any questions or comments that have come in from the audience?
I do. And actually, it sort of goes back to that first question we had and sort of really what happened around COVID time. The question is, onboarding seems to cause a lot of issues when it comes to B2B fraud. How is that best dealt with?
Vince, you want to take that one?
Sure, absolutely. Multi-dimensional approach to mitigation. What does that mean? It means having access to big business data across industry where you can vet that a company actually exists and that the person that you're doing business with is actually an authorized agent of that particular business, and what that affiliation level is. Vince Smith associated with D&B, great, that's publicly available information. However, there should be additional touch points or insights that you can glean from having big data on whether or not Vince Smith is associated and authorized to do business with or on behalf of Dun & Bradstreet. Fraud insights across industries. Fraudsters tend to move in waves. First, going from company to company, then across industry. So if you're in an ecosystem where someone else is reporting fraud on a particular individual or business, and you know their prior historical linkages where they've committed fraud before or fraud attempts, if you're aligned inside of that ecosystem, you might be the next target that they're going after when it comes to committing the fraudulent act. Now, the first bank or company may suffer a little bit, but if they catch it in time, they could limit their fraud losses and alert the community of these fraudsters making these attempts to defraud businesses. Access to that big business data, the fraud insights, and as well as the consortium type fraud data is a huge mitigating factor. And then you talk about the new digital tools that are out there that can make sure that the person's device is a not tampered with device and that they're coming from the right country or using the right browser language, that their digital information maps out to the appropriate company, are just a few of the tools that people can use right now to help mitigate fraud, especially the onboarding process. Would you add anything to that, Andrew?
I would, from an organization standpoint, being an operational guy, right? Know your gaps, know your risk appetite, know your strengths, know your weaknesses, know what sources are out there, right? A big thing, and Vince was talking about, there's availability of some data that's out there, right? But do you really trust that data out there? What's that company or organization doing to mitigate against that misrepresentation, right? There are some platforms out there where sure it's easier to exaggerate and to puffer, or even stand up your own website, right? Mm-hmm. But what's key to look at is when you're out there as an organization and even as an anti-fraud fighter, what is that data source? What is that data source telling you? What's the scope of that data source, right? How often is that data source refreshed? If you look at the 5 V's of big data, right? Volume, veracity, value, variety. I'm forgetting the 5th one here because it's an important topic here, but the 5 V's of big data are really important. That's something D&B as our certified fraud examiners that we evaluate when we conduct our own investigations as well.
Yeah. Well, one of the things, Scott, I forgot to mention is a lot of companies only have access to their siloed company data, which limits them tremendously. What I love about Dun & Bradstreet is our humongous, vast, comprehensive database of businesses that we can verify against. I'm a data guy. I love data. I will analyze it every which way you can analyze it. And that gives you some insights onto the trends of fraud across businesses, the trends and types of fraud. Andrew mentioned earlier that it was identity theft early on, and people are moving more towards business misrepresentation. We also saw it heavily in the financial services sector. As we plug holes or mitigate well in one sector, they move on to the next sector. And I think Joanna pointed this out earlier, that now insurance is getting hit hard. So while financial services is still getting hit because a lot of the companies don't understand business fraud and the mitigation tools available, and fraudsters see that a lot of companies are doing at least the minimum, they're going to move to the easier channels. And right now we're seeing the trend moving away from financial services, not quickly, but quickly moving into insurance fraud.
Okay, all right. Let's move on a little bit here, because I want to delve a little bit into here about the observations that you both had when working with companies on their fraud mitigation. And so when it comes to businesses, are they treating this a lot like consumer fraud? Because we were talking about this backstage earlier about consumer fraud and how that can be implemented, or what lessons can be learned from that and implemented at a business level. But it's not as simple as that, is it?
No.
Do you want to take that, Andrew, first, or me?
Yeah. I'll jump and then you fill in where I miss, or you disagree, right? I never know. But as far as businesses and what we're seeing, right? We're seeing there are opportunities for businesses to understand what it is about that business. What are their processes, right? How are they knowing their customer? What are they doing to know their customer? And what tools and data are they using to accomplish that goal, right? When you look at knowing your customer from the business lens. It's not just knowing that business, right? We know individuals at the businesses commit the fraud. So it's KYB and also KYC, right? Know your business and know your consumer, right? Tying back earlier is, if that principal has previous engagements where there is that malfeasance or that misrepresentation, you're going to want to know that as part of your onboarding and due diligence process, right? So it's the detecting of fraud and knowing what scope and how wide of a net they have to cast to fully understand their customer, how to investigate it, right? What are the sources? What is the data that you need? Who can you trust? Who can you lean on to help you fight fraud, right? You need, as Vince was alluding to, you need a multifaceted approach to fight fraud and to understand fraud and how to understand the bottom of it. And then, how to resolve it. What does it mean? What's the impact to my organization? How do I improve it, right? Leveraging the tools and capabilities and techniques that are out there, including the data, to better help you protect your bottom dollar.
Mm-hmm.
Vince, anything you want to add there?
Absolutely. I've talked to a lot of companies in the last 2 weeks doing voice of customer research. The number one thing that I've found, Scott, is that a lot of businesses don't know business fraud. They don't know how to mitigate it. They don't know how the trends are going on. They're familiar with consumer fraud. So the first thing they do in the digital landscape is they set up consumer fraud tools to try to vet in the digital landscape or the business environment. And they work initially because you do have to vet an individual, and there are very good individual verification tools out there. But there aren't a lot of companies that are able to vet out that this individual is associated with this particular organization and that they're authorized to do business. And that's where they fall down. And the industry, in my opinion, is screaming for tools to help them better vet out businesses, that they're not shell companies, they're not synthetic companies, that someone hasn't actually taken over or assumed the identity of a business, and then ensuring that that agent or person they're dealing with is actually authorized. They're siloed. I mentioned that earlier. They don't have access to cross-company, cross-industry data, and that's where companies like D&B can come in and assist them. They do have access to some aggregated data, but aggregated data is not good enough. You got to be the original source, people reporting to you directly. You have an access to that private entity data. That's how you vet a true business. And again, the trend, they don't know what other companies have seen in the areas of suspicious activity and fraud by an individual or businesses or the linkages thereof. That's the number one trend that I've seen. And the industry would love to have tools in place where they can better vet the business and the affiliation of the person they're doing business with.
Okay, yeah, I hear you there, Vince, definitely. So, the industry is crying out for, for better tools in their fight against fraud. But what else should companies know about improving their B2B fraud mitigation efforts? And Andrew, why don't you start off on this one?
Knowing where your risks are. What are your processes? How often are they looked at? Who are the team members that are viewing them? Who's responsible for them? Right? What is your biggest risk? How do you plug that? Right? So it's almost conducting. You need to have self-awareness, and you need to be aware of what your processes are, as well as where those gaps lie, and how then knowing when you know that risk and knowing that gap, how to mitigate it, how to reduce. Right? You're never going to stop all fraud. The goal is to mitigate as much as you possibly can, right? That's just the nature of the beast. So how do you reduce that? Well, trusting your partners, trusting your vendors, knowing that they're the experts and letting them help you. As Vince alluded to, something that Dun & Bradstreet can help our partners with and our clients with. All the data that's out there, right? Knowing your risk, knowing your appetite for fraud, and then how to use smart tools and capabilities and data to mitigate against it. And then who do you have resolving it, right? You need fraud examiners. You need people that understand fraud to be able to mitigate and help you push forward. And then I think lastly, and I think it's most importantly, it's a top-down culture, right? You need the tone from the top to come down and say, we need to mitigate against risk. Mm-hmm. Otherwise, you're fighting a steeper fight, right? So it's an organization's buy-in. You have, consistent employee training on fraud, on the awareness, what is going on in the marketplace, and how it affects your organization. So really, it's about an organization buying into the fight against fraud and then leaning on their third parties for support to help them accomplish their goal.
I'll add on there, and I'll ride this horse forever. Access to cross-company, cross-industry, comprehensive business data and fraud insights. Without that, you're in a siloed world, and fraudsters can take advantage of you. You'll do a good job for a while mitigating fraud, but as fraudsters learn your systems, they'll be able to navigate through your loopholes. Secondly, you got to adapt to the changing fraud environment and trends. You got to understand the linkages between companies and individuals and the types of fraud schemes that fraudsters are using and changing to. You have to have a tool in place that can adapt to those changes. Most companies have systems that are stale. They're good at one point, but they don't quickly adapt to the changing trends, whether it's identity theft, business misrepresentation, the different types of fraud schemes that are happening. Is it account takeover? Is it first party? Is it third party fraud? Is it bust out? They don't really have the tools in place today to adapt to the changing environment and landscapes of fraud. And when you put the two things together, having access to the information, whether it's in a fraud score or fraud scores or fraud attributes that you can use as a single touch point for fraud or suspicious activity identification, or you can use those attributes to build your own fraud score. Companies just lack that business data today. The second, and I've mentioned it over and over again, you got to have a tool that changes with the changing times. What you did yesterday, fraudsters are going to learn and be able to navigate through your system. Change with the changing times, change with the fraud tactics, and you'll be able to stay, if not on par, maybe a little bit ahead of the fraudsters in the digital landscape.
Well, I'm sure that's something that that's a position we'd all like to be in. Andrew, any closing thoughts from you?
Buy-in from an organization. Your organization's got to be bought in, right? Otherwise, your fraud operations team or your fraud team will have a steep challenge, right? Knowing to mitigate that risk. As Vince alluded to, got to have the data, right? There's a lot of data out there. And there's businesses like Dun & Bradstreet that have a ton of data regarding risk and especially fraud risk that can help our clients and help all the viewers that are here listening to us today. And you got to keep up, right? As we pointed out in an example, you have business identity theft. I'll just go in and compromise a charter. But now I'm going to take it one step further because people are aware of it now. And now I'm going to move that business to a different location. Now I'm creating more paperwork, right? They're trying to obfuscate and make it more challenging on an organization. As fraud evolves, an organization has to evolve with it.
Okay, well, look, guys, I'd love to talk about this some more, but we really have run out of time, I'm afraid. So thank you so much for your insight. And if anyone has any questions about B2B fraud, or you want more information about how Dun & Bradstreet can help you, please visit the website dnb.com/B2B fraud. And that URL will be posted in the comments as well. But for now, thank you so much, Vincent and Andrew. Thank you, guys.
Thank you both.
Thank you. Thanks for having us, guys.
Okay, and also thank you to the audience. I know that you've posted several questions here, and honestly, I really wanted to tackle some of these questions, but I think we would have been here until tomorrow if we had done. Just to give you a brief idea, where there's a question about crypto and fraud, and also a question about open banking as well. What we will do is we will try and reach out to you directly to give you some answers, or try and link you in with Andrew or Vincent to try and answer your questions as well. So thank you so much, and we'll try and reach out to you. Now, but first, before we close the show, moving onwards, just to remind you about the dates for the diary, which is the 1st and 2nd of November, where FinTech Live returns as a hybrid event in London. Now, you might be familiar with the show. We've held an edition previously at Tobacco Dock, but this year, or for this event, we're moving to a new venue called Magazine London, which looks absolutely stunning. It's in Greenwich, overlooking the Thames and Canary Wharf, so really appropriate for the financial industry audience. As I said, you can join us in person, and tickets are available right now. I'm sure we'll have a link posted into the comments section here, so please do come along, join us in London, and you can also join us online as well. You'll be able to watch all of the sessions online, because it is a hybrid event. Now, Joanna, I feel like I've been doing a lot of talking today, and I haven't had a chance to really chat to you. But what were your thoughts on the Dun & Bradstreet conversation regarding B2B fraud? Some interesting takeaways there for businesses, I thought.
Really, really interesting takeaways. But I think the thing that hits me the most is that when you're a business, what you want to be doing is getting on with the business of running your business. And the trouble with the cyber and fraud industry, because it is an industry now, is that if companies try and tackle these problems by themselves, it's just going to take so much focus off what their main purpose is. That you have to get somebody in to help you. You have to rely on the digital ecosystem. You've got to partner up with people that know exactly what they're doing, because you're experts at what you do. They're experts at what they do, and it's just such a complicated field. You can't. It's not something that you can wing, because there are just so many elements to it.
Absolutely. As you said, businesses just want to get on with doing business. And that's why you need to reach out to partners and experts who can help you, like the guys at Dun & Bradstreet. So that's all we've got time for today. Just a quick reminder that the new issue of FinTech Magazine is out now. And so if you visit our websites, and hopefully we can have those. There we go. If you visit our websites, fintechmagazine.com and insurtechdigital.com, you'll be able to see all the latest news, the opinions, the features, and the videos. And remember that this show will be available to watch on demand as well. So if you've seen any conversation or discussion points that you want to share with somebody, they can come and watch the show as well. So thank you for joining us. As always, it's always been a pleasure. Delighted to see Jo here as well with her insight in the latest news. Thank you to Vincent and Andrew for joining us all the way from the US. And of course, to the production team and marketing teams and our video team as well for pulling all the strings and making this show happen. We'll be back in around 2 weeks' time with more FinTech news and features. But until then, wherever you are, bye for now. We'll see you in 2 weeks. Bye, everyone.